Thank you very much, Angela. Where do you start? Well a day, what evil looks had I from old and young. Instead of the cross, the albatross about my neck was hung. I remember Brother Hutton baiting that into me in Thurles in the 60s. But we certainly have an albatross around our necks. Hopefully we'll work towards releasing that and getting it off our necks over the next, and we'll talk about that tonight. And I'm looking forward to the other three speakers telling us how they propose that we do that. Thank you for the invitation to speak at the McGill Summer School, and for the honour that that invitation bestows on my organisation, ISME. I'll put it down to the boyish wit, I suppose, of the director, Joe Mulholland, that he has arranged that the chair for tonight's debate is Angela, who is the CEO of Rehab, because if there's one thing our bankers need in Ireland, it's a bit of rehabilitation. God help them, they suffer from an almost incurable version of MRSA. Merciless, reckless, smug arrogance. We come here tonight with a backdrop, I suppose, of economic and social problems which are slowly coming to the surface, and with no real coherent, comprehensive plan to tackle the difficulties that face our great nation. 450,000 of our citizens still cannot find work. Many businesses have been shuttered. Home values have declined dramatically. Small towns and rural communities have been hit especially hard. And for those who had already known poverty, life has become that much harder. Small and medium business owners are in the firing line. And for those and the unemployed, and so many others, change is coming not fast enough. And they share a frustration and they share an anger. And you know, there's something else that they share. Owner-managers of small and medium businesses in Ireland share a stubborn resilience in the face of adversity. After two of the most difficult years in our history, they remain busy, building and maintaining computers and servicing machinery, producing food, retailing, finding new ways to market, starting businesses, and some are even going back to school or back to college. They're also working in the community, coaching the under-9s and the under-12s in GAA and rugby, and helping their neighbours and networking. And as one owner-manager said to me recently, we are strained but hopeful, we are struggling but encouraged, and we won't let those bankers grind us down. And it's because of that spirit, the great decency and the great strength, that I suppose I have never been more hopeful about Ireland's future than I am today. Despite our hardships, despite the dearth of bank credit, despite the total absence of a coherent and comprehensive economic plan, our entrepreneurial spirit is still strong. We won't give up. Small and medium businesses won't quit. We will not allow fear or division to break our spirit. But the true engine of job growth in this country will always be Ireland's businesses. Governments don't create jobs. Well, they create some jobs, as we've seen, but government don't create wealth. What government can do, of course, is create the conditions necessary for businesses to expand and to hire more workers and to get those 450,000 back working. And we have to start where most new jobs do, in small businesses. Companies that begin when the entrepreneur takes a chance on a dream, or a worker decides it's time she became her own boss. And through sheer grit and determination, these companies, these firms are doing their level best to weather the recession and the credit freeze, and they're ready to grow. But when you talk to small business owners in places like Glentees and Thurles, Letterkenny, in Carlow, and you hear their stories, and you find out that even though they are vulnerable, they still have viable plans, they still have their dreams. And yes, banks are beginning to lend. As a result of the government rescue package called NAMA, they're lending, I suppose, to bigger, less risky companies and finding every excuse under the sun to turn down vulnerable but viable small businesses. These are the same banks, of course, that are only in existence because we taxpayers have guaranteed the banks, and the government have used a new wheeze invented under NAMA called long-term economic value, LTEV. And ladies and gentlemen, LTEV has allowed our government to pay over the odds for bank assets, the impaired assets, of course, with the excuse or the reason given that these assets would one day achieve a higher value than they were worth at the time that NAMA took them over. I now ask these state-assisted banks to use the same logic in assessing small business loan applications. These SMEs are in trouble because of the global downturn, exacerbated by the Irish banks' mismanagement over the last number of years, and they need access to bank credit. They will achieve LTEV, long-term economic viability and value, as long as they are supported by the banks during this downturn. These owner-managers of small businesses, the real wealth creators, the real risk-takers, the real backbone of the economy, they don't understand LTEV. They don't understand bankers' lies and auditors' negligence. They don't understand why it seems that bad behaviour in the banks is rewarded and hard work on Main Street isn't. The Irish financial system was in danger of losing all credibility, with customers being fleeced, shareholders being duped and international investors being hoodwinked, all done under the eyes of the financial regulator. We were operating with a blind and indolent watchdog who mistook smart suits and impeccable manners for business acumen and honest endeavour, allowing reckless and smug, arrogant bankers to do as they wished and play deposit carousel to disguise their sorry plight, ostensibly within the law. Internationally, we were in danger of becoming, or being viewed at least, as a banana republic, and that financial sector continued and contributed hugely to that situation. The new financial regulator and the Financial Services Regulatory Authority have a clear mandate now. They must restore confidence in the regulation of the Irish banking sector. They have to set in place procedures for independent banking oversight, and they must insist, just on a small thing I suppose, that all banks have the same year end, just to stop this deposit carousel that we've seen in the past. Let me just, I suppose, now turn to lending for SMEs. The ISME Quarterly Bank Survey demonstrates clearly the real position with regard to bank lending to small businesses. We've been doing this survey now for nigh on 18 years on a quarterly basis. And throughout all the years in the 90s and the early part of this century, the refusal rate for small and medium businesses was somewhere around 20%, 18, 22, but it was right along for 16, 17 years. Every quarter you were hitting about the 20% refusal rate. And lo and behold, in September 2008, the ISME survey showed that the rate of refusal had risen to over 50%, and it remains at that level since. The refusal rate, of course, is constantly disputed by the banks and their mudguard, the Irish Banking Federation. The well-funded IBF quote ad nauseum from the report Lending to SMEs prepared by Mazars. They've done 3 reports now. By the way, the final one was funded by the banks themselves. And they continuously quote the great figures and the great amount of loans that are being granted, as they say, to small businesses. But they conveniently omit a number of points. One, Mazars noted that the internal processes within the banks continue to fail to record numbers or types of inquiries for loan and finance. This blatant omission by the banks has resulted in, of course, the consultants' inability to be precise on the number of refusals for bank credit. The banks, for instance, record only fully completed formal applications. They fail to log all inquiries for credit by business and therefore underestimate the number of companies requesting and ultimately being refused credit. This fact alone accounts for a large-scale under-disclosure, as evidenced from this and from other surveys carried out by our own association, by the County and City Enterprise Boards, by the Institute of Certified Public Accountants. So we're not alone in talking about the refusal rate of being over 50%. The Mazars report, again, this independent report, also confirmed a number of things. What they're saying, and again this is in the words of the consultants, that the internal processes within the banks fail to adequately record the level of SME lending. This is our banks. They're failing to record the level of lending. They fail to adequately record all business inquiries for finance. They couldn't differentiate between new and existing customers' loan applications. They couldn't distinguish between requests for overdrafts and for term loans. And after all of the hoopla, the IBF and the bank assurances, it's disappointing but enlightening, I suppose, to note that the consultants' Mazars were unable to secure any meaningful analysis of credit inquiries. Our details of the ISME Bank Watch, despite the claims of the bankers, continue, as I say, small and medium businesses continue to suffer from restrictive lending, with over half, or 55% in fact, being refused credit. And that's in the quarter up to the end of June. The results confirm that thousands of companies are still at the mercy of their banks, and the future viability of their business is being threatened by the actions of bank management. Of course, the public relations departments of the banks try desperately to give the impression that small business lending is not an issue. But the reality on the ground is much different. The evidence from the survey confirmed that, as the dogs in the street know, that the banks for small business have almost closed up shop for SME lending. The bank's claims that they are open for business are simply not true. Their claims of 8 out of 10 loans being granted has entered into the lore similar to the dog ate my homework, or the cheque is in the post, or Neville Chamberlain's peace in our time. And what's really galling, I think, for many small businesses is the high moral ground being taken by these smugly arrogant banks in their decisions to refuse credit to small business, with criticism of liquidity and other performance ratios regularly outlined as the reasons for refusal. I think this is a bit rich coming from organisations that have had to be bailed out by us, the taxpayers. The government initially had argued that NAMA loan transfers would fix our banks and get credit flowing. There are 3 reasons to believe that this is not the case. Number 1, the banks remain undercapitalised, and obviously that's going to tend to restrict lending. The high default risks are likely to restrict lending, and the banks have yet not developed a sustainable new funding model. You see, the equity capital, the difference between their assets and their liabilities that the banks have to maintain, and that the G20 countries have agreed that banks will need to have higher levels of that equity capital in the future. But even after the NAMA recapitalisation, the 2 Irish banks, the 2 main Irish banks, are still well below what is required. So the banks are starting from a point where they are viewed by markets as not having enough capital. And there are more losses to come, of course, in the banks. Every day we're hearing the increase in losses, and oops, we forgot this, and oh my God, there's that. And the severity of this recession will trigger big losses on mortgages, business loans and credit cards. And the bottom line is that our major banks are seriously undercapitalised relative to the size of their balance sheets. And the banks that are undercapitalised, in other words, that they have low capital relative to their risk-weighted assets, they can address this. They can bring in outside investment in return for ownership share. They can reduce the bank's assets by restricting credit. Number 1, I suppose, when you think of bringing in outside investment, the bank shareholders and their CEOs generally are reluctant to dilute their ownership. I remember Eugene Sheehy from AIB said he'd rather have died. And private investors don't seem to be too interested in Irish banks at the moment. The government could recapitalise, but they want to restrict their ownership shares as much as possible. And this combination of banking and political concerns points towards shrinking credit, and that's going to be a key issue over the next number of years. Beyond the problem of low capital ratios, it's not realistic to expect large increases in lending to households and to SMEs anyway in a recession, with default rates high because of the extreme recession. Banks generally tighten credit during a recession, and this isn't, as we all know, a typical recession. And also, I think we have to remember that with less competitive banking market, interest margins for loans will start to go higher and higher. So we have a broken business model here in Irish Bank. Irish banks traditionally obtain their funds from local deposits. But during the construction boom, of course, they financed most of their expanded lending via borrowing from international wholesale markets. That source of funding has largely dried up. It's mainly been replaced by borrowing from the ECB. The NAMA bonds count as eligible collateral, of course, and the banks will now be able to increase but it increases their dependence on the ECB. And the ECB's unlimited lending policy is coming to an end very soon. So, if you think that the banks are going to continue to lend at a higher rate using the funds NAMA have put in, I think it's not going to happen. The bankers, need to shrink their balance sheets because of their undercapitalisation, the riskiness of lending to vulnerable businesses and struggling households, and they won't and can't tie up money in long-term loans if ECB needs to be repaid soon. So should we force them to lend? An obvious reaction to the conclusions just reached. Just force them to lend to businesses. But of course, new rounds of bad loans, because again, that's what would happen from forced lending, will only worsen the problem of undercapitalisation. So we can't really force them to lend. And it doesn't solve the problem of finding a funding source to replace the ECB. A better approach would be to take steps to fully recapitalise the Irish banking system with state money. Even if the bankers don't want this, because it dilutes ownership, and it would be akin to a temporary nationalisation. Small and medium businesses will continue to struggle for credit, if not freed up as soon as possible, with companies simply ceasing to exist and the resultant loss of thousands of jobs. It's no exaggeration to state that the very continuance of these companies remains in the hands of their banks, who are now hell-bent on shoring up their own balance sheets in the aftermath of their own totally inept and disastrous management. Finally, I will say the government must ensure that the banks provide lending to at affordable terms to hard-pressed but viable small businesses. The NAMA legislation supposedly obliges the banks to lend to the SME sector at agreed levels. However, on past performance, the banks will do everything, as I'm saying, to shore up their balance sheets. And they cannot do that by lending to SMEs. And they will use the excuse of undercapitalisation. So, ladies and gentlemen, no country with economic problems of this magnitude has ever come out of recession until the banking system has been healed. One way of healing the system is to have government recapitalise the two main banks, if necessary through a temporary nationalisation. One way of lightening the load of the albatross around our collective necks is to ensure that credit can flow to small business. And this can only come through recapitalisation. Thank you very much.